Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. On this channel, we focus on dividend growth investments. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. It really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers a dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio every week. I also do large purchases if I have extra funds from a side job or a bonus. I cover all my investments into the portfolio out in the open, fully transparent. I want you to be able to see how a real portfolio is built out over time. And that is what this video will be about. My additions to the portfolio this week, any options made, any buys, any sells. I can tell you right now, we didn't sell anything. We are doing a lot of buying right now. We did add $1,898 to the portfolio and some change. You'll see that here in a little bit. And if you have not done so already, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. Again, I share portfolio updates like this every Sunday. I do a stock pick of the day video series Monday through Thursdays where I look at a stock that's pulled back on a day to see if it's presenting any value. I also do a couple of monthly monthly videos. One is covering the dividends paid for the previous month. I usually do that right at the tail end of the month, so there will be one of those coming up, or right at the beginning of the next month. So as we roll into November, you'll see that. I also do the stocks I'm looking to buy in the month coming up. So you'll see a stocks to buy in November video as we exit October. So let's get into this one and see what we did with this $1,898. What did we add? Were there any options? And again, a lot of red in the market, a lot of volatility in the market right now, and a lot of value in the market right now. So hopefully you're out there and adding to your portfolio as well as these companies, these great companies start to pull back. Let's jump right in. So we'll start with options as we always do. October 23rd, we sold to open a covered call, right? So we owned 100 shares of Next Era Energy, ticker NEE. This is out of the utility sector. We've been running this wheel on this one for a while. We're going to continue to do so. And we did one contract here with a $56 strike price with a expiration date of October 27th. So that was Friday. And this did expire in the money. It was just over $56. So this will be assigned. We'll get that $5,600 in capital back, and we'll run this wheel again next week. But this week we received $24.46 in premium. So that goes right back into the portfolio as part of the funds that we saw on the first slide there that we added to the portfolio this week. So $24.46 in cash back into the portfolio with the Next Era Energy covered call. On October 25th, the first dividends rolled in. We received dividends from Cisco Systems, ticker CSCO. This is out of the information technology sector. We received $65.16. And we have the drip set. So these funds, the $65.16, went right back into Cisco Systems, picking up 1.23352 shares. And that 1.23352 shares adds an additional $1.92 in passive income. So this is the portfolio creating that snowball. I didn't add anything to Cisco. The dividends paid out bought that more than just over one share. So now every time Cisco pays out a dividend, I'm going to be putting a little over almost 1.125 shares, almost 1.25 shares into the portfolio every time this pays out. So 4 times a year, I'll be adding to this position, whether I add any new capital or not. The funds already invested into Cisco is creating that new capital, buying those new shares, creating additional capital. That's this new passive income that I didn't have to work for, right? So that's part of the dividend snowball. Now, if I was adding to Cisco Systems and this pulls back, then the snowball would increase in capacity and increase in its growth as well. Now we're on to the new capital. The first day we did investments into the portfolio, I actually had this one set on a pre-buy. So I had set this up last week. I had a little bit of funds left over from the Next Era Energy covered calls that we did last week whenever we received those funds. So I had set this to buy 14 shares at $26.56 strike price. So this one just hit on Monday, just happened to be in my wheelhouse that day. So we picked up 14 more shares of Haverty Furnitures Company, ticker HVT. This is out of the consumer discretionary sector. Added $371.84 into the portfolio. And those new 14 shares added $16.80 in additional passive income over the next calendar year. Now, we weren't done. We were pretty busy this week. We added more capital. On October 25th, we added another $1,283.61 into the portfolio. This was the biggest tranche that we had, the biggest buy of the week. We did have one more you'll see here in a minute, but October 25th, this $1,283.61 went in and picked up 10 more shares of Cisco Corp, excuse me, ticker SYY. This is out of the consumer discretionary or consumer staple sector. We picked up those shares at $65.66. This is another one that I've been building out. I'd like to get this to 100 shares along with Haverty's Furniture. These are the two newest positions in the portfolio, so I'm going to continue to build this one out. I like this anything under $70, so I'm going to continue to add it. I would love it to pull back down in the $62, $63 range, but I'm happy to add it here at $65, $66. We added 10 more shares to Realty Income, ticker O. This is the monthly paying REIT here. This one continues to pull back. Anything under 60 is a buy for me, so I definitely like it under 50. And another one I'm just going to continue to add to this one here. And we picked up, again, 10 more shares of Realty Income. This was one, I think if I could add 10 shares every week, I would be happy. But there's so many deals right now in the portfolio that I just don't want to focus on one. But this is one that I will probably continue to add to as well. Ally Financial, ticker ALLY. This is out of the financial sector. We added 4 more shares there at $23.16. This is another one that I'd like to just nibble on, maybe 3-4 shares here and there. Anything under $25, I really like this one as well. This is the bank I use. This is where I have my savings account, where I have my checking account, where I have this brokerage account, Ally Financial, as well as both my daughter's custodial accounts are in Ally as well. So I use this bank. I also invest into this bank. And not last but not least here, we added 3 shares of Valet. This is a mining company out of the material sector, ticker VALE. Those 3 shares we picked up at $12.96. And all total, this $1,283.61 that we added on October 25th in these new positions added $57.95 in additional passive income over the next calendar year. And finally, on October 27th, we added a little bit more, $243.32 more to the portfolio. With those funds, we picked up 1 share of Siboney-Stillwater, ticker SBSW, another one out of the mining sector, material sector, mining company here. Picked up that 1 share at $5.08. We picked up 2 more shares of AT&T, ticker T. This is out of the communication sector at $14.93. And we weren't done adding to Haverty Furniture Companies. This one continued to pull back. Actually, I think it finished out the week at just below $26 per share. So I'm hoping that it stays down in the $25 range. Again, I want to build this out to at least 100 shares, maybe 120 to 150 here on this one. And I'd love to do it at $24, $25 range to bring this cost basis down a little bit. But we added those 8 shares at $26.05, ticker HVT, out of the consumer discretionary sector. And these new positions or new shares here added $12.04 in passive income. All total, we invested $1,898.77 and added $88.71 in passive income over the next calendar year. Now we're going to get to the sector weights. We'll run through these real quick. Communications is sitting at 9.39% of the portfolio. Consumer discretionary is sitting at 1.15. Want to continue to build out this with the Haverty position as well as Williams and Sonoma. If Williams and Sonoma continues to pull back and gets back down into that 120 range, I'm going to continue to add to that one as soon as it gets there. I'm hoping that it gets there. Those are 2 in the consumer discretionary. I do have a couple others in this sector that I'm looking at. Pool is one. There's several others that I'd love to add in here. And hopefully, as the market pulls back, I will be adding some new positions to the portfolio as well. Consumer staples sitting at 6.68%. Procter & Gamble is one I'd really like to add to here. If that one pulls back into the low 140s, I'll start adding to that one again. Energy makes up 6.82% of the portfolio. Financial is sitting at 9.34. Bank of America and Ally Bank are 2 that I'm going to look to add to here over the next couple of weeks. Healthcare makes up 17.74% of the portfolio. Now I'm in a conundrum here a little bit. Johnson & Johnson, I've hit 100 shares of, but it continues to pull back. It's down in the 140s now. So I'm probably going to add I know I said that I didn't want to add a whole lot more to that one, but I may actually run that up to about 110 shares. I might nibble on that one a little bit over the next couple weeks as long as it stays down under 150. And bring down that cost basis a little bit. It is getting to be a larger position in the portfolio, so I don't want to make it too large. We'll look at that here in a little bit, but I don't like any one position being over 10%. So I might run it up right to 10% and back off. I'm on the fence on this one here, but it's also the biggest position or the biggest sector in my portfolio as well. So I really don't want this one get over 20% either as far as the sector weighting, but it's just too cheap not to add to. So I'm going to add a little bit more to Johnson & Johnson, even though I know I said last week I'm pretty close to cutting that one off, but I'm going to do it. Industrial sitting at 7.7%, technology sitting at 8.52%, materials makes up 13.79% of the portfolio, utilities at 5.56%, REITs and real estates in third place makes up 13.33%. Medical properties trust is one that I want to continue to add to. Realty income, like I said, I'm going to continue to add to that one as well. And if Omega Healthcare Investors ever pulled back again, I would add to that one as well. But that one has run up, so I have not been adding to that one. And you can see here over the to the right of the screen here, these are the portfolio sector weights broken down. You can see the percentages, same as this pie chart here, but also how much I have in funds in each one of the sector weights as well. Now I show this every week. Again, I want you to see in full transparency how a real portfolio is pulled or built out over time. You know, not pulling any punches here, not pulling any cards off the table. I'm going to be out in the open with what I'm doing in the portfolio, whether I'm up or down, and I am down. I am down 9.83%. And what do? I keep buying. I see the red as a buying opportunity. I've done my research on these companies. I like the companies. I like the numbers involved in the companies, their margins. I like their income statements, their balance sheets. I like their future projections for cash flow. I like their current cash flow. So I'm going to continue to add these positions. I will probably start adding in some new positions into the portfolio as these stocks have really pulled back. A lot of the ones on my watch list, and we should really do a video on my watch list so you can see what I have on there and what I'm potentially adding. But let's run through here the portfolio overall. Here's the ticker. These are the positions within the portfolio here. How many total shares I own of each. The current price as of the close of business on Friday. The market value, where it sits as of the close of business on Friday. My average cost per share right here. My purchase price, how much I have into it. Whether I'm up or down here. If I'm in the red, obviously I'm down. The percentage I'm down or up. Let's just look at a couple of these. I'm down 43% on MPW. That's one I want to continue to add to. Bring this cost basis down. SBSW, another one. You know, those are my two biggest losers, we'll call them. My two biggest gainers. Owens Corning was up about 50% at one point. Now it's down to 21. This one has really pulled back, but still up 21%. Williams and Sonoma, like I said, only 2 shares. This is one that I would love to get back into this 120 range where I could add to it, but it has really run up. It was in the 150s, so it's come back a little bit, but it's still at 145, so I'm not going to add there. 15 point OHI, Omega Healthcare, if this one pulled back, I'd love to add to that one, but it's run up. You know, EPD is up 11%. Even Cisco Systems is up 3.58%. So whether I'm in the red or the green, you can see it here. What sector each company falls in. Quarterly, monthly, or semi-annual payer, how much they pay here, what their current dividend yield is as of the close of business on Friday, my yield on cost. So you can see here, like Enbridge, for example, my yield on cost is 6.98. So I would love to bring up my cost basis with it being above my cost basis, 8.39. So I'd love to add there. So any of these in the red will actually bring up my cost basis, right? So that's why I want to continue to add to these as these are down. I want to lock in some of these higher yield that we're seeing right now as these companies pull back. Pfizer, another one I'd like to add to, continue right here. Verizon, I know some people are avoiding Verizon, but I've been adding to it. AT&T, I know some people are avoiding AT&T. I've been adding to it. All right, portfolio weighting. So what we saw on the previous screen was the sector weightings. Here's each individual positions weighting. Estimated annual income. We're getting real close to $1,000 on a couple of the $1,000 a year on a couple of these. Verizon, we're at 818, right? That's one of the biggest payer that I've got. Omega Healthcare Investors sitting at $727 a year in annual income, right? So I like that some of these are getting close to 1,000. Payout months, what months they pay out. The dividend growth year over year right here, and where they sit between 15% of their 52-week low. Let's talk about this one a little bit here. Let's use Haverty. This is one that I'm trying to get to 100 shares. I'm not very far off, so I'll continue to add. So Actually, let's use a different one. Let's use, no, we can use Haverty. Okay, so it's currently at $25.88 per share. So it's obviously below my cost basis. So I'll continue to add this to this as long as it's under my cost basis. But let's say it was to get back up to $27.80. So long as it doesn't go over $28.59 and I want to get it to 100, I will add it up to that cost base, $28.59. That's where I'm comfortable kind of cutting off. I don't want to add it if it goes any higher than that. So long as it stays under my cost basis, that's a good sign. I'll add it until I get to 100, 110, 120 shares. But if it goes up to even, let's say, $28.20, I would continue to add to it until I got to 100 shares, so long as it stayed under $28.59. Procter & Gamble, this one for example, it's at 147, and I'm willing to add to it at $140.50. So even though my cost basis is $136, if it gets back to 140 or under, I will add to it even if it's not under this 136, right? So it's not just about my cost basis, it's also about where it sits at the 15% of 52-week low. That's why I put this in here. Now I have 5,404.076 total shares, market value sitting at $165,697.18. I have $183,764.71. I am down $18,067.53. And oh my goodness, am I freaking out? It's terrible. I've lost a bunch of money. What am I going to do? I'm not going to do anything. This means absolutely nothing. Unless I sell all of the positions in the portfolio, I have actually not lost a dime. So even though Verizon says I've lost $2,421.47, unless I sell Verizon and lock in that loss, I haven't realized this loss, right? That's an unrealized loss. No different than over here, Omega Healthcare Investors. It says I'm up $1,232.32. I'm not up unless I sell Omega Healthcare Investors and lock in that gain. So a loss or a gain is not realized unless you sell out of the positions. I don't intend on selling any of these positions unless the fundamentals of the company change, which none of these have. So I'm going to continue to add these and hold them for the next 5, 10, 15, 20, 30 years possibly, so long as they maintain their status as good businesses and meet the metrics that I've set up. And if you watch my stock pick of the day series, you'll see the metrics that I've set up as my investing criteria, just on a high level, to see if I'm willing to continue to add to a company, whether it still meets my metrics, whether I should remove it if it doesn't meet my metrics. So you'll see that on the stock pick of the day series. And if you haven't done so, really appreciate you watching. Don't forget to subscribe. Hit that subscribe button down below. Hit that notification bell. Like the video. Share with anyone you think you might find value. Drop a comment down below. Let me know what you have been adding to your portfolio. I really, really do appreciate hearing from you guys, and I do personally read and respond to the comments. So if you've got a company you'd like me to add to the stock pick of the day series, go ahead and drop that down below as well. But let's finish up the video here. So again, I am down $18,067.53, but this means nothing to me. I don't care if the market's up. I don't care if the market's down. I don't care if the market's floating sideways. If you were watching this 3 or 4 months back, I was actually up almost 4 or 5%. I wasn't cheering that, oh, I'm up 4% any more than I'm, freaking out that I'm down 9.83%. Doesn't matter to me. I'm not looking to sell out of any of these positions. Current yield as of the close of business on Friday, 5.096, and my yield on cost sitting at 4.595%. And this right here, this red circle right here, this is what it's all about. Again, whether the market's up, whether the market's down, whether the market is floating sideways, I am focused on the passive income provided by the positions in the portfolio, the dividends paid out on a quarterly, some of them quarterly, some of them monthly, some of them semi-annual basis, continues to go up, continues to increase week over week, month over month, quarter over quarter, year over year, as I add new capital, as the positions in the portfolio pay out dividends, and as the positions in the portfolio raise their dividends. This snowball, this passive income continues to rise, and it currently sits at $8,443.75. And the overall portfolio will grow based on the increases the companies make, at least over the last year, at an average of 7.36%. So that beats inflation. That's what I'm looking for. I'm looking for the portfolio to keep up and beat inflation and to increase over time. Like I said, I'm not done investing, so I'm going to continue to add capital, buy the positions that are pulled back or under my cost basis or under their where they sit at their 15% of their 52-week low. And I am looking to add a couple. I should really do a video on my watch list so you can see what I'm watching overall. I'll try to put something together on that over the next couple weeks. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. It really does help a small YouTube channel like me. If you are interested in watching a real portfolio be built out over time, fully transparent, you don't have to pay, for some paywall or some site to go to or any of that. I do it right out in the open. I don't have a paid Patreon account or any of that stuff that some other YouTubers have. I just show you what I'm buying, what I'm selling, the options that I'm in. I'm just a real person. I grew up in a double wide trailer to a pretty poor family. So I want to show that someone like me who doesn't have a degree in finance, who didn't go to school for this, who didn't grow up to rich parents or, uncle who's an accountant or anything like that, that if I can do it, you can do it too. And to not be afraid. The red days are part of building a portfolio. The green days are part of building a portfolio. Sometimes you're going to be down. Sometimes you're going to be up. That is part of the roller coaster of investing. That is why I chose dividend growth investing, because whether the market's up, whether the market's down, whether the market's floating sideways, I get those dividends just like Cisco Systems paid this week. So the market was down, a lot of red in my portfolio, but I still got dividends paid to me. That's also why I run the options that I do. It's another way for me to kind of supercharge and get more income into the portfolio and build it up faster over time. Well, that is it for this one. Like I said, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop it down below or let me know what you're buying. What are you investing in? What are you adding to your portfolio? Have you made any sales? Are you selling anything right now? Has anything, turned the corner and turned out to be not the company that you thought it was and you got out of it? I'd like to know that down below as well. Drop it in the comment section. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount of comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor. Hey, we'll see you in the next one.